you will find that you are correct on most of your higher time frame analysis. Most of your errors and mistakes will come from the lower time frame noise. That is a quote by the man, the myth, the legend, ICT himself. Now, why does he say this? Because you need to figure out how to build a narrative with the higher time frames, and that is what this episode is going to be focused on, right? Building a bias and a narrative using the higher time frames. Because if you're not using the higher time frames, my friend, I'm sorry, you're going to get chopped up in the lower time frames, and you're not going to know what is going on or where price is going to draw to. Now, that is why that draw on liquidity video is important. So that way you could blend the draw on liquidity with the higher time frames, and you can build a narrative or a bias going into your trading day with just those two things. You will try to figure out what is going on, right? Where is price most likely going to draw to with the higher time frames? Because you need to see, in my opinion, the daily time frame and the weekly time frame have to be very clear for you to really build a solid narrative and a solid bias going into your trading days. We need to figure out where price is most likely going to go to, and that starts on the higher time frame, okay? Using the higher time frames is going to help you build a narrative and a bias for any given day or any given week and even any given month, okay? You need to understand that the higher time frames hold the higher power, and you should not neglect the higher time frames. I know a lot of you guys are zoomed in, way too zoomed in, even using the seconds chart when you don't even know what the higher time frames are doing. You have to pay attention to the higher time frames. That is where all trade ideas and all trade biases are formed, is the higher time frames, such as the weekly, the daily, and even the 4-hour. And yeah, that is really what you guys need to focus on first. Understand draw on liquidity, then move up to the higher time frames and figure out where price is most likely going to go for that given week, month, and even day. Okay, so let's get into it. So here we have the weekly chart for Euro USD. Now, these are just going to be examples of showing you guys how to build a narrative and a bias and a trade idea using the higher time frames. It's very, very simple. It's not very hard. So as you can see here on the weekly chart on Euro, we started grinding down in mid-July all the way through the start of Q4, and then we started an uptrend, right? Now, we came down and we drew to this sell side level, or these sell side levels, right? We had relative equal lows right here on Euro USD on the weekly chart. We obviously swept those. We actually made one right here with that low, equal lows. The following week, we swept it. We didn't close a body candle closure below this level, which is a good sign. And we accumulated down here, okay? Now, I would have thought, and I did think, and even ICT himself thought we were going to draw to the monthly time frame. Now, I was not trading Euro USD at this time right here, but I'm going to show you guys why you need to wait for that speed and displacement, like I talked about in the draw on liquidity video, right? On the weekly chart, just looking at the weekly chart, there is no speed and displacement here except for this candle, right? But we didn't leave a imbalance, right? So I wouldn't consider that enough speed and displacement for me. This right here is the displacement I would look for, right? And then you start looking to the left. Okay, this is on the weekly chart. We have a nice candle here. We formed an imbalance. So this imbalance you could use to build a narrative and a trade idea by looking to the left, right? We obviously cleared this sell side liquidity right here, right? We cleared it there, and now we're starting a pullback, okay? Now, if we start zooming into the daily time frame, right, we obviously have another buy side liquidity right there, right? So we can start marking that out. Boom. And then we obviously have another one up here, right? We can start marking that out. So we cleared out this one, made another high, and then we started coming back down, okay, into that weekly imbalance right there. So this is how you start trying to frame a trade idea, right? As you guys could see here, as ICT says, the wicks do the damage, the bodies tell the story. As you can see here, there was no body candle closure below this weekly fair value gap. This is when you can start building a narrative and a bias and a trade idea around your trades using the higher time frames. You just look for that speed and displacement on the higher time frames, and then you start zooming in. This is how you build a narrative with the higher time frames, right? And there's plenty of other ways to do it as well. You can start looking at the correlated assets like DXY, GBP, USD, but that's a little more advanced techniques that I will most likely talk about in another episode, like SMT and how to, use the correlated assets with each other. So besides the point, this is how you start building a narrative and a bias and trade ideas on the higher time frames. You start zooming in, you start looking for that speed and displacement on the higher time frames. Did we sweep liquidity on the higher time frames? Now we start zooming in, we start looking for speed and displacement on the lower time frames as well, like this. and we draw to that higher time frame points of interest, right? That higher time frame fair value gap. It could be a breaker block, it can be a unicorn setup, which I'll talk about later. It can be an order block, it can be lots of things, right? Lots of PD arrays. In this case, it was a weekly fair value gap, and obviously we are in a bullish, we're making higher highs and higher lows, right? We're in a bullish structure right here on EURUSD, and we're obviously drawing higher. Price looked like it wanted to go up to this buy side level, right? And again, bodies tell the story, wicks do the damage. Go back to the weekly chart. We see here that obviously EURUSD had a pullback. We came back down. We did not close a body below this weekly fair value gap. We actually tapped the weekly order block as well, which is a good sign because we didn't close below that fair value gap. Then the following week, we pushed up and we failed to sweep this weekly high right here. Now go back to the daily. As you can see here, now we have relative equal highs right here, okay? Now you're starting to get your speed and displacement on the daily time frame. Let's go to the 4 hour. So as you can see here, we start moving up. We see that the weekly did not close a body candle below that weekly fair value gap. Now we're getting the speed and displacement on the 4 hour. Now we have relative equal highs. Okay, let me go ahead and delete these lines so it doesn't get messy. Now we have relative equal highs on EURUSD, and now we're pulling back into discount. Okay, now we're pulling back into discount of this price leg, right? From this swing low to that swing high. You take your Fibonacci, boom, now we're in discount, okay? This is where you start looking for longs in discount, okay? Never really, you don't need to look for longs in premium, which is above this 0.5, the 50% level of this price leg. You never really want to look for longs around there unless the fair value gaps are being respected. That's very close to the liquidity that's being hunted, okay? But most of the time, if you're a beginner, just wait for price to return to a discount of the price leg that has the speed and displacement, okay? So it comes down to there. There's no fair value gaps here. The bullish fair value gaps are being disrespected. So if you even go lower, right, you go to the 1 hour here. Let's see if we could find any trade ideas to attack these relative equal highs. And you guys see how I'm building a narrative and a bias using the higher time frames, starting from the monthly, the weekly, the daily, and then we start zooming in and trying to find trade ideas that fit that bias, because now we have relative equal highs on the 4 hour and 1 hour. So now we know that liquidity and stops are resting up here, okay? We've retraced obviously on a Friday, so the new week's coming in. I don't trade on Mondays. I try not to trade on Mondays. I usually start my trading week on Tuesdays. Tuesdays through Thursdays are my best days personally. And the way you find that is you need a journal. So anyways, you start trying to find trade ideas here, right? We swept liquidity. Now we're pushing back up. We're disrespecting bearish fair value gaps on the 1 hour. We come up. Now we're changing to bullish structure right here, right? So we have bullish structure going on here. And now that we know that we have relative equal highs here, we could just start looking for setups here on the lower time frames, maybe the 15 minute, 5 minute, etc. I don't really like going to the 1 minute, but that's just personal preference. You could start looking for setups around here, attacking the higher time frame liquidity. That is how you build a narrative using the higher time frame, right? You could start to scale in, or you could start to trade on the lower time frames, and you are using the higher time frame to basically form a bias in trade ideas so you could use on your lower time frame, so that way you can hold your trades even longer up to that higher time frame liquidity points, right? We're using liquidity and we're using the drawn liquidity and higher time frame to tell us a story on what we need to do on the lower time frames. And that's literally how you build a narrative using the higher time frames. You literally start from the monthly, weekly, daily, and then you start zooming in. Okay, what's the weekly doing? What's the daily doing? What's the 4 hour and 1 hour doing? How can I start to, start blending my ideas and trade ideas together using those higher time frames? And now we go to the lower time frames to try to find a good position where I could position myself with good risk management to attack that higher time frame level. Okay, that's literally the name of the game. Super simple. And then obviously we attack these relative equal highs and even go for that other buy side level right there. We obviously leave this one up here intact, and now we're just pulling back, taking out the lower time frame sell side liquidity, where a lot of traders have stops set up right here. We have a lot of sell side liquidity there, and obviously we have these relative equal lows that I do think get taken out possibly tomorrow to end the week off, and then maybe we could start forming a trade idea at this daily fair value gap. So that's kind of what I'm looking at right now. maybe a short down to there, and then we could see some sort of reversal. But yeah, that is pretty much it, guys. That is how you form a higher time frame narrative, so that way you could use the lower time frames to form a narrative and a bias and start to solidify your trade ideas using the higher time frames. It's literally that easy. If the daily and weekly are not clear, then it's going to be very hard to try to form a trade bias, because a lot of you guys, again, are zoomed in. You guys are not focusing on the higher time frames. You guys are neglecting the higher time frames, which is a big no-no. You guys need to focus on the higher time frames every single week, every single day. You need to figure out where that daily candle and that weekly candle are going to expand to, or where it's most likely going to expand to, because if you don't know that, my friend, you are going to become the liquidity. So I hope this was a very clear and precise explanation. If it was, please leave me a comment in the comments below. Like the video and let me know how you guys are enjoying the series so far. It would mean the world to me if you guys left me some feedback on it. But yeah, guys, hope you guys are enjoying it so far. I will catch you guys in the next episode. Peace.